Boom. What's up, everybody? Welcome to another episode of the Tuesday interview hosted by Trust Engine and Mortgage Coach. This video will be in the Mortgage Coach YouTube channel by the end of the day. If you like what you saw, give it a like so it helps with the algorithms, and share it with your mortgage friends. Today's call, I think, is super important. There is a massive challenge coming down the pipe, which is also a massive opportunity with student loans. I think everybody in mortgage, everybody in real estate, pretty much everybody in America knows that student loans, they're a drag on the economy. They are a drag on homeownership. They are holding back a lot of first-time home buyers from going from renting to owning. Obviously, this is a topic that's been, politicized. This is not a political conversation. This is a financial conversation. Here at Trust Engine, we are dedicated to helping families achieve financial freedom. And we believe that the way people achieve financial freedom is, first, it starts with getting into home ownership and then having strategies, getting into the right mortgage so they can achieve financial freedom at some point. So this is super important. I don't know the exact numbers, but I'm pretty sure this is impacting millions. Well, I know it's millions of families, millions of consumers, and I can think of no better than Scott Nicholson to walk us through, one, why should you, as a loan officer and a mortgage professional, get involved in this? And how can you use this as an opportunity to get new realtors to like you, trust you, and do business with you, and to help realtors sell more homes? Because at the end of the day, if you can be a mortgage professional that is helping an agent sell more homes, they're going to dig that. They're gonna do business with you. So he also invited Scott Schang, I've known Scott for many, many years. And I just think of, like, when I think of innovators in real estate and mortgage, I think of Scott. When I think of, like, one of the smartest guys who's always on the cutting edge of the next thing in technology, I think of Scott. We are going to schedule another interview with Scott sometime in the next month or two, hopefully within the next month, on AI, on ChatGPT, and really talk about how can you use that as a weapon, as a tool to gain market share and win in this market. So stay tuned on that. Scott, you pretty much need no introduction in this community. I've interviewed you, like 50 times. So other than if you're new to the community, this is the guy that, even the most successful loan officers in America, they come to him to learn mortgage strategies that meet the market, because 2-1 buy downs have been so hot. Scott happens to be like, a Jedi master at, affordability strategies using buy downs and seller buy downs. But today he's going to come to us. He's going to educate us on student loans. So Scott, jump on stage here. Hopefully everybody will be inspired. They'll be educated. They'll get resources. And I think the second half of the call, you're going to teach very specific tactics that they can take to the market.
Yep. That's 100% right. So can you hear me all right? I'm good.
We can hear you. And then remember, everybody, if Scott says something you like, use those little reactions down below, like give us a thumbs up just to make sure we know you know how to use them. And also put any questions you have in chat, regardless of whether you're watching this on our YouTube channel or you're watching this in Facebook Live in our channel right now. Communicate. We want to make this a mastermind. Let's go, brother.
Thumbs up, hearts, give me all that stuff. So one, thanks for having me, Dave. And then Scott coming along with me. So a couple things, just what this 1 hour is going to look like. So first of all, I want to open your eyes and inspire you with the opportunity that unfortunately is going to present itself. And it could be in a not a very good manner, but it could be a tremendous opportunity for not only you serving, as LOs, serving your clients, your current clients, and future new clients. So the first part of it, we're going to talk about, and this is what Scott's kind of wheelhouse here is student loans. We're going to go over what has happened, all of that. The second half is kind of going back into my wheelhouse, and we're going to start bringing in technology solutions. We've put together a very extensive class just to help you guys push to market. And so I'll back up in just a little bit, kind of where I started with this. So I was watching the debt ceiling, right? I forget, it was called the Financial Responsibility Act, I think was ultimately passed. So I was watching that closely, in particular, kind of provision in there on dealing with student debt. And I'm thinking to myself, as a loan officer that deals with affordability challenges, like, wow, how is this client who's been on pause for 3 years, how are they going to handle the, turning on that spigot of repaying? And I'm going, wow. So I'm going to watch this closely. Obviously, if you weren't paying attention, just a quick 30,000 foot overview. When they passed the debt ceiling there just a few weeks back, they included a provision basically, and I'll summarize here, that both parties agreed to where, okay, no more kicking the can. Starting June 30th, 30 days after June 30th, which I'll call it September 1st, those invoices will start showing up to those student loan, recipients, so to speak. So that means important days to me where I got to get out into the marketplace and get ahead of this is September 1st. I need to get there before those servicers get there. Number two, those payments turn on, and those payments are due October 1st. So those who need help, can we get there fast enough to educate them with all the different myriad of options to do that? And there's really 3 clients that I want you guys to think about, and we're going to go over later, is this is going to impact your current client. That's your current client you've done a mortgage with, that holds a mortgage with you, that you communicate to on a regular basis. They have student loans, which they haven't paid in 3 years. So think about that family income pie. Where is that $1,000 or $500 debt going to slide into, right? With literally none to zero disposable income. Number two, what about all those first-time home buyers coming into the market with aspirations of homeownership, that with all this excess debt that's going to come to them in September and October, how are they going to afford the house at these prices and these rates? Number three, the move-up buyer. How about the buyers that we put into homeownership in 17? Heck, during the pandemic, just 3 years ago. And I want you to think of this number, and I'm going to introduce Scott here in a second. When the pause was passed, which was the CARES Act, that was March 13th, 2020. That's when all of the federal debt was paused. So they didn't have to make a payment. And the interest rates at the time were 3 1/8. Fast forward today, as it's coming undone or these payments are due, we have rates at, we'll call it 7% for simplicity. That's a tremendous shock for that buyer who's trying to come into the market, right? And think of the move-up buyer who bought during the day at 3 1/8, who owns the mortgage, right? And maybe has some credit card. The point here, tremendous opportunity from past clients to first-time home buyers to move up. So with that said, Scott Schang's been a friend of mine for 15 years plus or something like that. We've always been part of collaborating on something. I respect him a lot. He's very knowledgeable. Once you get to know him, you're new in this community. So I'm excited to bring in a community I've been involved with for 16 years. I'm an avid MortgageCoach user. I use the software religiously. So with that, I'm going to introduce Scott just to really talk about the magnitude of what's coming in and some finer details. And then we're going to get into some things that we're going to be able to help you with. So with that, Mr. Scott Schang.
All right. Thank you. I appreciate that. And I appreciate the kind words and the opportunity. So student loans, if student loans haven't been on your radar yet until this conversation that we're having now, it should have been. The student loan guidelines changed in 2015. And in 2015, what happened was the way that the agencies calculate the student loan payment, whether you have, and the thing that caught everybody is it was called the 1% rule. And it was an FHA rule. Freddie Mac had it at one time. Fannie Mae had it at one time. And it basically said that if your payments, so the agencies got together and they said, well, if the payment is not a fully amortized payment to pay off your student loan debt at the end of a fixed term, then that unpredictability makes us nervous. And we're not going to let you use any different mortgage, any different payment on your student loans. So David mentioned what are the numbers. There are actually There's almost 45 million people, Americans, that have student loans right now, and almost 29.3 million of them are between the ages of 25 and 50. So think about that, Scott. That's exactly what you were talking about. That's our first time buyer demographic, right? Our 25 to 36. And then the 50 is kind of our move up, right? There's our empty nesters and things like that. So the
Hey, Scott,
go ahead,
Scott,
Dave.
real quick. Is there any data on the different ranges in student loan debt? Because, you know, in my mind, the people, and I don't know if it's under 10,000, but let's just say it's under 10,000 in student debt, it's going to be a lot less life-changing. And then an exaggeration on the high end, someone with over 100,000, it's going to be, you know, game-changing. Is there any data or slides that kind of shows us the different tiers and how many people fit into these tiers?
Yeah, and it's pretty easy to find. There's a lot of data about this. Some of the data comes from, so the Federal Reserve. I got the data from the Federal Reserve on the 43.8, and then there was a Forbes article about the 25 to 50 range, and that their average debt is about 38,000 for that price range. It's significant. It's significant, and depending on what their payment is, you know, at the time, like whether they're in an income-based payment. So I've written a lot of content about this since 2015, and I have one article, and I shared this in Scott's group the other day. I've got over 57,000 unique visitors to one article since January 2020. So there's a lot of people that are confused about student loans, and the most important thing is that inexperienced loan officers and call center lenders, will call them, they have no clue on what the guidelines are around student loans. So what we're telling you today is a huge opportunity. And, you know, Scott, you kind of said, you know, it's maybe an unfortunate thing. Well, it's not fortunate or unfortunate. It just is. Just like it just was, but it's absolutely an opportunity. And it's an opportunity for those of you that are true financial advisors, that you're using your mortgage coach, you're using your lender launchpad, you're breaking down numbers, and you're truly trying to educate and empower consumers to make more informed decisions. And these kinds of problems are exactly the kinds of problems that it takes somebody who cares a lot more than a call center lender to even look at. Because the reason I have so much traffic to this content is because we don't always get first shot at online consumers. They get stuck in a call center that spends a lot of money on advertising, and they end up telling them the wrong information. So they end up coming back to us. So that's the importance of us being able to create content and learn about this stuff and put stuff out there that these consumers can find, because they're going to be told misinformation. They're going to be told no, when the answer is just they don't know the guidelines. And so this is a really big opportunity. So, Scott, you mentioned this, and I think this is so important. When the CARES Act passed, I mean, remember the chaos of everybody's mortgage payments stopping, right? Like everybody stopped making their mortgage payments within a 90-day period. Well, at the same time, everybody was forced to not make their student loan payments. And that caused a lot of issues. And it took a little while for underwriters to catch up and to figure out. So what's been happening for the last 3 years is underwriters have been accepting what their payment was prior to administrative forbearance. Because and not all underwriters got this. I mean, it took a while to get there. So these folks have been kind of struggling with this for the last 3 years, and they didn't have a choice. Like they could, like for the mortgage payment, you had to opt in. For the student loans, it went into administrative forbearance, and they just stopped having to make their payments on their student loans. So now, by no choice of their own, now they have to start making those mortgage payments, or they have to start making those student loan payments, and it is going to significantly impact. They're not out of sight, out of mind, right? 3 years is a long time for not having to make that payment. And how many of them are paying attention to the news? How many of them are watching the debates on TV or whatever, and then having the ear that you had, Scott, to pick up on the fact that student loans are kicking back in? And then pile on top of that, the whole student loan forgiveness conversation that happened prior to that. So this is a 1-2 punch for these consumers, that like it's like it's one to the gut and then one to the chin.
Let me just jump in just for 2 seconds, just to make sure people understand a couple things with that. And because we get a question, or I get questions all the time now as I'm starting to get more involved in this, is there's a difference between them through the, oh shoot, the act they just passed. Well, it's called the debt ceiling for simplicity, right? That's turning on student loan payments. And in the legislation, they cannot override that unless they get into an emergency situation again, like COVID. So it's happening. So where I think consumers are getting mixed up, they're going, oh no, it's in the Supreme Court. Well, no, the Supreme Court's about ready to decide on, do they going to help you with 10 or 20,000 of forgiveness? And they've already ruled no. So basically any day now, they're going to say the final no. And then I think people just are preying on that to like, hey, I'd love to get, 10 or 20 written off. That's just not going to happen. Then they have just a month or two to get their finances in order. I don't know how quick they can even do any of that stuff. And all of a sudden you got payments. So I want you to talk about, Scott, this. I'd love to, because this is some of the stuff we were talking about, how missing payments can impact a cash out refi, a purchase, how that's going to impact them. Also want to talk about, what is it? Interest capitalization, I think the term is called, to where when you started with a student loan at X, when you graduated, and then you're making these minimum payment, right? It's almost like that neg-am arm, how it's growing, it's far exceeding than the original loan that was taken out. And a lot of these consumers who have this debt is just growing exponentially. So I want to talk about how late payments is going to impact the 3 consumers we're out here to help, and getting that information. So a little bit on that would be awesome.
Yeah, all right. I want to talk about that, but I also kind of feel like we're spending a lot of time in sort of the negative territory of this, or sort of the negative impact territory. But there are some really, really good solutions, some really positive solutions that we can be proactive on, that we can basically be the knights in shining armor and come in there and save these consumers that don't know what their options are. So one of the challenges with student loans, well, you're right. These fully amortized loans, they look like a mortgage, right? It looks like the total cost of a mortgage with the interest over time. It's 2 to 3 times the original principal balance that you borrowed. And I'm not 100% sure on whether the interest was paused for those 3 years. But I think what it did do is it clearly extended their term. But the thing with student loans aren't like you miss a credit card payment and then you've got to wait 30 days or wait 12 months for it to fall off a DU on a 12-month look back. If you default on a student loan, that triggers a Cavers alert. That's government debt. So if you have government debt and you default on it, that's the same thing as foreclosing on an FHA loan, but there's no waiting period. So there's no waiting period, but if you're trying to get government financing, FHA, VA, USDA, and you have this Cavers alert, you got to deal with that now. And that means that you have to make it, you don't have to pay it off. You just have to get back into payment plans and have it removed. But, we all know Cavers isn't the first thing you see on a pre-qual. Like that usually comes a little bit later, and that's a nasty surprise that you don't want to run into. So being aware of that, if you're looking at a credit report and you're seeing late payments or some sort of default, and I think there's a huge risk of this, Scott, and this is something that we're really going to push in this class is getting this education out there, because how many people aren't going to know that their student loan payments started again? Right. I mean, we talk to people all the time and they're like, oh, I thought that credit card was paid off. And that's why I haven't paid the $12 balance for the last 3 months. Like, stuff just happens, life just happens. And sometimes people aren't going to know, or they changed bank payments, or they had automatic withdrawal, and now maybe the automatic withdrawals aren't happening again. I see that all the time. There's a lot of challenges.
3 years servicer, that servicer you dealt with in 20 may not longer be in business. So that's a new servicer taking over. So there's a new relationship you have to start up again.
It should be federal student loan debt, and the overwhelming majority of all debt is student loan debt. There's only like 7% of loans are private student loans, but that's another battle that we have to fight, because a lot of the things we're going to talk about here today, some of the positive things that we can do to help these folks with student loans, these options are only available if they're in federal student loans. And if you haven't been in this space and you haven't paid attention to this, there's a debt consolidation contingent that actually got kicked off of Google. They weren't allowed to do Google AdWords to consolidate federal student loan debt into private student loan debt. But there's a lot of scammy companies out there that are trying to get you to put it into, consolidate all of your federal debt into a private student loan debt. And then you lose all of your benefits that we're going to talk about with the federal student loan programs.
So that was so important right there. I actually want you to say it again, because I want people to understand the difference. Who is this helping particularly, right? And then also what these companies are trying to do. So actually reiterate that, because I think people need to understand that right there.
Well, and I'll even say it in another way. Your competition is debt consolidation companies that are trying to pull people out of their federally protected student loan programs and put them into consumer debt. At interest rates, there's no forbearance opportunities there. There's no skipping payments if they have financial hardship. There's no opportunity to adjust their payment to their income if their income fluctuates at some point in the future. So hopefully that instills the importance of you putting good information out there. This is almost a moral imperative that we educate consumers about what their options are and what they might run against, because they're going to have these companies out there trying to take their student loan debt, and quite honestly are going to jeopardize their ability to have their student loans forgiven. Because you were talking about the $10,000 or $20,000 of student loan being forgiven. All federal student loan debt is forgivable after 20 years. And when you look at one of those amortization tables, you're going to get a break there. And we're going to talk about some student loan payment programs that their payment could literally be zero for 20 years and then have all of their student loan debt forgiven. And if they work in public service, if they're a teacher, if they work in the government, if they're firefighters or first responders, they only have to make 10 years worth of payments and they can have all of their student loan debt forgiven. But nobody's educating consumers about that. When folks when they get student loan debt, when they come out of school and their student loan debt kicks in, the default is a fully amortized payment. So it's paying it off in a fixed term, just like a mortgage or a car or something like that. But there is a slew of programs available. If slew is a common word, there's a, for the younger crowd, there's a gang of programs available for folks that can modify their payments according to their income. And there isn't just one program. There's like 5 different programs that can adjust their payments. And these are the types of things that what we're going to teach, Scott. These are the types of things that we're going to educate consumers about and give you the tools to be able to show consumers, hey, I know this is scary that your payments are going to start up, but I can help you with that. I can help you. You don't have any disposable income? Fantastic. Let's get your payments let's get your payments to something that you can afford, which in a lot of cases, quite frankly, is zero. And that's acceptable. Well, that's acceptable for Fannie Mae. So Fannie Mae will allow you to have a $0 payment on a income-based repayment plan.
So think about this. Dave uses a term now, which he's had some great interviews with Sean and Jeremy lately. And his mission right now is the speed to need, right? Of getting to market quickly to fill that need. And think about that, guys. If, like Scott said, I love the second rephrase you did there. It's our competition. Our competition is going to try them to bait them out of the federal debt into those private, lenders, right? And to consolidate and all that stuff. I'm sure there's massive amount of fees they're going to be charging, all that.
Oh, yeah.
But the answer to this question, I know the answer, but I want people to understand this. If I had the student debt and mine was federal and I went and did that, do I have the opportunity to come back to the federal programs?
You do not. Once you're out, you're out.
Think
Once you're
about
out of
that.
the circle of trust. You can't come back in.
I mean, think about that. So let's get into, because we're getting toward the halfway. Let's talk about, and I know I'm going to put my originator hat on right now. The problem I would have with listening to, the two of us talk is like, man, it sounds just overwhelming, right? And Scott, and I'll tell you, I'm going to show my screen in a second. We're going to talk about a company called LoanSense.
Yes.
And Scott came into my group, Lender Launchpad community, and Janine came in, or it's Janine, I think it was, from LoanSense. I was like blown away, like, oh my gosh, this is it. I have a technology or software that I can own as an LO. I can deploy immediately into market, figure out where they're at now, and then get them into solutions of those 5 or 6 or 7 things based on what they need or whatever, and fix and help them with that federal debt. I want to get into that just to help the LO to say, man, more stuff I got to learn and all that crazy stuff. I want to address that now and then keep the ball pushing into solutions now. Yes, there are dark clouds. Yes, there are opportunities. Yes, there's going to be people trying to take them from us in an evil way, whereas that need for speed for us to get to market with content and education, it's the highest level of importance now moving forward. It's going to impact them of being able to buy a house or doing a debt consolidation refi and all that. So, I didn't mean to interrupt, Scott, but any other stuff that you think is important, especially for them to understand debt.
No, and I think you're going to cover this, but if I put my originator hat on, the opportunity that I see is this is an opportunity for me to start conversations, especially with my past client database, and start these conversations about, hey, do you want to consolidate debt? Do you want to do all of this stuff? It's like, hey, this is coming down the pipe. And if you're not aware of it, I need you to be aware of it. And when Dave mentioned, if we can help real estate agents grow their business, they have databases of past clients and they have databases of prospects and new buyers that maybe don't have this information. So if we have the tools and we have an easy way to be able to disseminate this information and educate these consumers, and we give this to our referral partners, man, they're amplifying this. They're sharing this like crazy, and we become the experts, and we become the ones that are the saving day. So I think that's probably a good tee up, Scotty, for you to start talking about what we're trying to put together here.
The second.
All right, guys. Before we do that, guys, but we just finished the inspiration, details on the opportunity, overall education, so that every mortgage professional that follows this channel can be smart. For those of you that are leaders and managers on this, I mean, this is something to forward your loan officers. Knowledge is power. Realtors don't understand this stuff. Every mortgage professional should understand the opportunity, the threat, the challenge, and the opportunity that what's happening with student loans has in America. It's important knowledge. If you are a mortgage advisor, if you're a transactional loan officer, and ask questions, pre-qual, here's your rate, here's your payment, here's your cash to close. Well, maybe this isn't for you. But if you're a mortgage advisor, a mortgage coach, this is core knowledge that you need to be expert on. So please share this, guys. Get the word out on this. This is a great 30-minute briefing of the opportunity. The next 30 minutes, Scott's going to get into specific tactics, specific strategies. He's going to show you how MortgageCoach and using a TCA, you can show strategies. He's going to show you how Lender Launchpad can be a tool to help educate consumers. Remember, this is a mastermind. So if you have comments or questions, even if you're watching this on YouTube after the fact, this won't be the last call on this topic. We'll make sure your questions get answered. And use a little emoji right now. Like, what are you feeling about this? You know, if you're just getting value, give us a thumbs up. If you think that, you know, a little applause. If you think this is killer, give us a little feedback. Okay, we got some hearts, we got some claps. Okay, we like the vibe, we like the energy. So Scott, you're up, bro. Rock it out.
So
Well, actually, before you get started, Scott, I just want to reiterate what you just said, Dave. When you're dealing with transactional loan officers that don't understand this, they typically work in organizations where the underwriters are also processing transactional loans. And these things are going to get caught. All these issues that we're talking about, if the loan officer isn't educated, the underwriter catches it. And when the underwriter catches it, it's 5-alarm fire because you're in process. So again, this is so vitally important that we get out there, because those consumers are going to go back online. They're going to start calling their real estate agents. They're going to start calling around saying, hey, they told me this about my student loans. And if you're out there and you have information out there about this topic and it sounds different from what they were just told, you're going to get those calls. So Scotty, take it away.
okay, so I'm gonna jump in. So Dave, where did I go? Lost everybody. Okay, so I'm gonna share my screen. I'm gonna deal with probably the hardest element, or maybe the mental, you're being like challenged, like, gosh, I don't know if I can get to market. How easy is this going to be me to get, or how easy is for me to facilitate this, like Scott and Scott are talking about. So I'm going to show you LoanSense. So LoanSense, I know, has been on this channel before with Dave. The thing I didn't really pay attention is because I think it was during the pause. And so during the pause, I was like, you know, no one cares about it, so I'm not going to really focus on it. That's why I got my attention, my ears up going, whoa, if they turn that back on. Now, I'm going to teach you something that I went ahead and signed up for, a company called LoanSense. And Scott knows them really well. They did a demo in my community, Lender Launchpad. And I was like flabbergasted. Really, that's it? Because as an LO, you know, I go, man, I don't have a bunch of time. I need to have scale. I need to get through my whole database. I need to get to my agents. I need to get to everyone quickly. So I'll give you an example. So this is a calculator that I get from LoanSense, and watch how easy this is. So I'm going to input really a couple fields. So I'm going to show, like, let's say a client of mine, like, hey, Scott, I got student debt. You know, let's sit down for a quick consultation. I go, great. What's the family income right now? So let's say it's 100 grand. Let's say what is the federal debt that you have right now? Say it's 90,000. Let's forget the other stuff. Let's look at the rate. The average rate, I think, is 6.5%. We'll go 6.1. And a family, let's say there's a family of 3 there, or even 2. What it does is it calculates all of where they're at currently and what LoanSense can do to modify that debt. And so the family I just inputted, they're paying roughly $1,004 a month, right? And then after that, LoanSense can put them in the correct program that's going to help them and get that debt down to $500 a month, which is a $504 savings per month. That's what when I saw that, I got, I'm in, let's go, because I can get this at scale. And here's the next thing, Scott, I want you to speak about this just for a few minutes, just on what they do, who they are. And then what you can do is you push them over into LoanSense, they sign up, they get them. It's not your modifications back in the day where they charge the upfront fee. It's just a bunch of scam. Is now LoanSense steps in, says, all right, so you're referred by Mr. Nicholson, great, let's figure it out. And then once they get the solution, and the tolerance in here is, I think she said in the demo, was a few dollars. And then my goal here is to push this client into LoanSense, cut that debt in half. They provide a certificate, which I can go right into underwriting and say, hey, that debt is not $1,004, it's $500. and my ratios immediately dropped. So talk about this, Scott, and the impactfulness and the ease of what LoanSense really does here, because it sets up the rest of this call.
Yeah, no, I met her when she was very much a startup. Catalina was the founder, and we had a lot of conversations because I was writing a lot about the student loan payment issues and the income-based repayment options. And her and I kind of got connected, and we started talking about this and talking about the opportunity for loan officers. So she really geared this entire her entire company towards helping loan officers not only save money for your consumers so that they can, solve DTI issues so that they even have an opportunity to refinance. But if you look over there on the other side of that, you're talking about increasing their purchasing power on a new home buyer by $71,000. And that's a huge deal. So what this company is, and it's crazy inexpensive. It's like less than $250, I think, like a one-time fee for the consumer. And they're counselors, and they know how to do the paperwork. They know how to analyze. They built this calculator based on the federal criteria for qualifying for one of 5 different income-based repayment programs. There's income IDR, income driven, ICR, income contingent, IBR, income based. There's our repay, there's pay and repay, pay as you go, pay as you earn, and revised pay as you earn programs. So there's a lot of different programs. And the reason why most consumers don't get into these programs is because they need to be recertified every year. So this is another thing that LoanSense does. So this company, the only thing she does, and the reason she did this is because she had challenges trying to qualify for a home because of her student loans. And so she started figuring this out and was like, this is a huge problem and a huge disconnect with the mortgage industry and with people that carry student loans. So their entire company is just counselors. And like you said, Scott, you push a button and they take it over. And then you have a dashboard that you're following the progress. And I think she said that they're getting most programs done well inside of 30 days. So their entire service is, what is it?
21. They said 21 is a bit long. So that's in that side of escrow, right?
And we know as originators, that's completely dependent on the consumer getting you the information that you need, right? That's our turn times, is how respondent are they? But yeah, so they keep track of it. I mean, it's kind of like if you work with one of those credit repair companies that you have the dashboard and you can see how their stuff is progressing. But that's the high level on that tool.
So that's a tool I don't have to spend much time with. It's a quick calculation. Heck, I even built it into my Lender Launchpad platform. I have an affordability calculator that I can send out right here. And then I just do a short little video on there. I'm talking about know your numbers, the calculator's right here. They can just jump into that and just opens up into a calculator. So now we're going to start introducing you to tech and all the different nuances that we can help you. So this is going to be my wheelhouse here. And this is why I'm so excited to partner up with Scott, just because of his front end experience, but also he's going to be coming in on his back end experience too, especially with chat and marketing and one-to-many. So I'm going to show you a couple different presentations like this one. So we're going to go high level. So let's pause for a second. We identified an issue coming in. We've laid out all the massive opportunity that we can help people. We identified a threat, which would be the private loans. Now it's going to be speed to need, as Dave says, in this market. How can we get good content to our consumers and to our agent partners? And I'm going to show you lots of different little, and I'm going to put this presentation in chat. Maybe Paul can distribute. So I put this together for you guys, and this is a high level overview. We're not going to go through all of it. This is a high level overview. Student and I'm teaching them just a little bit what's happening, all the different programs that are available to them. Input we talk about into an executable game plan into homeownership. Step one is really getting into debt consolidate. Quiet. getting into Loan Sense, and then I start introducing the 3 people that we've identified that we can help. And that's your, your first time home buyer, your move up. There's my TCAs built in the computers, because what I'm showing them is I want to teach them that the debt is coming into it. Let's not just stick your hand in this head in the sand and maybe it'll go away. Let's be proactive. And I've identified 3 people that I can help. And then in this presentation, I'm doing more of a high level overview. And then what I'm pushing into is to the 3 TCAs on how I can help those individual buyers. And this one is the move up buyer. So when I click on that, or the consumer, then here's me describing how I can help them in this environment. There's the TCA. I show them as a current. They want to move up. They're getting blocked. All of this debt's coming in. And we show them how we deal with the debt, and we can get them into those homes that they didn't think they could. So there's a move up situation. Here's a first time home buyer TCA. And all of these TCAs, I'm going to be able to provide with you and actually have videos to how I put them together. So you can see exactly how I put these together, my mindset, and how I presented all of these different tactics. Because here's what's going to happen. Like Scott said earlier, they're not going to know all of a sudden before it's too late. Hey, Scott, I want to get pre-approved. Okay, August, we did that. Didn't realize they had the student debt until now we get into application, we find the credit, and now that debt starts to appear. So we'll call it the end of August, right? We start, and if you look at the payment, it goes from 55 to 65. That's a deal killer right there. So now how are they going to do it? So what I do, I'm going to show them option 1. Let's get in with Loan Sense and let's address that debt now. Let's go and shave those ratios, shave that payment. Let's get it into appropriate. And then I show them option 1, option 2, and I introduce Loan Sense and a temporary rate buy down. So I show them this in this detailed TCA and how I do it. And I think it's critical. Not only do we share this content with potential homeowners, which would be our past clients, it could be, but also our agent partners, because they're going to come down and say, hey, Joe agent or Mrs. Agent, I'm going to go and back out. Like, what? What do you mean? Because, well, I get student debt turning on. It's just not the right time to be doing this. So that's a client that's going to be pushing to the sidelines, based on their calculations, where knowing if the agent knew what we knew, they'd say, no, stop. They introduce you to Scott and Scott, and they can take over here and educate. And not only that, I think this is a big one right here. How many of our past clients have credit card debt and lines of credit? A lot. And the graphs show it, the stats show it. And they don't want to touch that great interest rate we gave them in the first, during the pandemic. So all of the expenses are being pushed into credit cards and lines of credit. So in this TCA in particular, I show them how the tipping point here for this client to where they raised their hand and said, Uncle, I'm done. And the point here is we showed them where their current mortgage is. We showed them with 50,000 in credit cards. We showed them a blended rate. So we could show 3 1/4, 6 1/8 on 50 in cards, 100 on a line for that. We showed them when now the student loan payment marches in, but we showed them a 2 steps. Cash out number 1 is consolidate all of the debt, go to Loan Sense and consolidate that into a better federal loan program, which we save cash flow immediately. And then let's say rates do come down into something I want to do in step 2. So think of check and checkmate. Step 2 is now I got a rate and term with my client, my past client, right? And now I'm taking all the debt I consolidated, and now I'm doing a rate and term at a much higher FICO score. This is what Jeremy said this yesterday, because it was fresh, because I watched his great interview with Dave. He says one of his loan officers having a problem going into, what do I say to my past clients? What do I deliver them? What do I do? There's a great one right here. Knowing like, hey, do you have student debt? If you do, you need to watch this. Even if you don't, you need to watch this. And we're going to talk. And so these are great presentations that you can get into. Not only that, I have the debt calculator that sits right there that I push them into, and they can calculate it and see it on themselves. So they can run their own scenarios right there from the platform. So does that make, is that Any questions on that, Dave, and how we did it, all the programs? And this is one-to-many type programs we're going to be able to help them with.
Yeah. So guys, I want to turn what you're learning on this call and the past 3 calls I've done into training. Like you need to train on this. So one, this will become a resource. We're doing what we're currently calling, we might change the name of it, but speed to need training playbook. And this is a need, like this is a big need in the market. You've learned in this call how to get to that need with consumers. You're learning how to bring solutions to this need to consumers. And so this will become part of this playbook. I'm showing it right now. We will be sharing a link. You'll be able to go to savageinsights.com. That is my personal website for all the content that I create that you can sign up and be part of. Also, there is a 1-800 number. Well, or it's not an 800 number, but it's to become part of my Savage Insights mobile club, so that when we have some amazing content, when Trust Engine comes up with, short form videos, like I'm sure there's going to be some 3-minute, 5-minute videos from this. You want to get that? Get into that mobile club. But all the links that Scott is sharing with you right now, they're going to be in here. So think of this as a playbook. So I just want to make sure that one, y'all know that. Also, when you look at these videos, like Scott just referenced last week's Jeremy Forcier, it was called Jeremy Forcier's top 6. Actually, it's called Loans Now. Loan Now strategies. You can not only watch them, but there'll be a transcription to it. So you can click on either. So I just want to make sure we're turning what you're learning into training. Like, stay tuned. We'll get that on here. So Scott, keep it rocking out. You're killing it, bro.
Yep. So a couple of things. There's just a chat that came in. The question was, hey, if we put our client over in a loan sense, does that pull them out of the federal debt? No, it actually, loan sense actually restructures. So they only work with all the federal programs. That's the point, is we get to keep them away from all the private lenders that are going to try to do, pull them out. We're keeping them in because there's so many there. And just to reiterate, Scott said, I asked him point blank, if my client leaves federal debt, goes into private, can they come back? No. So there's the need for us to get out and run that. So I'm going to show you a slide, just a couple slides, so of what we're going to be able to help you with. And so the class we're going to start running on the 28th. I think it's June 28th, 30th, and then 2 in July. We're going to kind of miss the 4th of July week for traveling and vacations, all that stuff. Scott and I are going to break all this down into great detail. I'm going to give you all of these too. So I have content built, all the Mortgage Coach TCAs go in here, all the slides, the decks, everything's ready to go. All you have to do to bring to the party and show up to this party is your mortgage coach. Bring your TCAs. And if you don't know how to build them, I'll help you with that. And so we're going to help you with the move up buyers. So right sizing, unlock for those Gen X. We're going to help you with the first time home buyers that lost buying power because of the debt, and we're going to help them regain it. And a lot of these people that are trying to get into home ownership, now that they're in their jobs and ready to go, I want to get in, we're going to help them also. But I think the important thing is, where is my, the cash out ones. I did 3 or 4 specific cash out ones that we're going to give you. So we're going to give you all of the decks. I'm going to show you a couple right now. All of the decks, all of the thumbnails, all of the 7 or 8 TCAs I've created. Scott is going to make mention of this in just a minute. Scott is brilliant at chat. So we're going to give you all of the prompts, all of that content, all of the thumbnails that go with each of these. Here's the cool thing, because you're going, okay, Scott and Scott, this is great. The awareness, the importance, everything's great. I got Mortgage Coach already. I think one of the biggest things in our industry is the deficiency of going one to many. And I think there's just not a platform that's going to be able to bring all of these tools together in a simple, concise, that the LO can not only move out to marketplace by themselves, but to bring in an agent. I think that's the huge missing element to our industry. And that's what Lender Launchpad's going to do. And here's the cool thing. I not only get to run a class for you guys, I'm giving you my software for $1. For the first 30 days, giving you everything, all the ingredients you need to make for student loan to help them. We're giving you all of that. Plus, I know Scott's working for us to help us with a discount with LoanSense, which I know it is. I don't know the exact details, so I won't get into that yet. But just know those classes are coming to the 20th, 30th, and July 12th and 14th. One ticket's good for all of that. Heck, the ticket's only $97, and we'll get into that in just a second. But I want to show you some
real quick, Scott. I don't know if you mentioned it earlier. I might have missed it, but I do want to remind folks that LoanSense is an active partner of Mortgage Coach. If you go to our partner page on our website, there's a little user book on what it does, how it works. So go to, I'll put a link in chat on how to get more information on LoanSense. But love what you're doing, Scott. Love how you're partnering with them. If you need any help, let me know. We've got a great relationship with those guys.
Okay, good. So it's even easier. Thank you. So here's an example of something I could send right into, just plug and play, go right into my database for an example. So here is a TCA that I'm analyzing a debt that we gave him during a pandemic, which is super low. Notice the thumbnail I put on there. And clients I speak to now, that 3% is locked away and the keys thrown away. And that's a huge disservice. That's putting a huge financial strain because other debt is being absorbed now because they don't want to touch their first trust deed, right? Now I can't touch it. So I'm going to put all my expenses on cards and lines and all of that stuff. So we're going to be able to share this with you to show you how you
Scott Nicholson
restructure debt and really help your clients out there. We're also going to be able to, I moved in my LoanSense calculator, have it right here on a widget that they can come in here and play with that. I show them via chat. I did some quick calculations chat. I show them the actual math and what a blended rate really is. And we show them all of that stuff. So we get into, I'm going to show you this one. I just played with this. I'm going to show you the power of this. And I'm going to focus. I'm going to be quiet because I want Scott to answer a few questions on some of the things we're going to be able to help you with as far as pushing content into a month, one-to-many. So we identified a tremendous issue coming here. We've identified a tremendous opportunity for us. We've given you a partner called LoanSense that's going to take the ease of converting federal into a better federal debt program. Now we're on into marketing, packaging. Now we're into Lender Launchpad, how we can get all of these presentations together and out to market. And so I'm going to give you something that I put together that I started this journey with, and it's my federal debt. You're saying, hey, Scott, how do I get my agents involved in this? Here it is right here. So it's this program. So I'm going to do, you've already saw it, the one I showed you. Where's my, there it is right there. So watch what I do in my Lender Launchpad account. I'm going to click on duplicate. I'm going to make this presentation private because I'm going to give this to one of my agents or all of my agents when I'm ready to launch this stuff, which is now. I'm just going to put Brad Kerr. Let's see, he's actually one of my agents. I'm going to put Brad Kerr on this. I'm going to go right down to a widget. I'm going to take my name off of this. I'm going to put him up front. I'm going to select Brad Kerr. And now I've made a piece of content that now Brad Kerr can go to all of his clients right now and take kind of ownership so he can lead the charge. And there's Brad. And then there's the video I created already. So look how easy that is to mass produce and build your army. There's your one-to-many. And that's the big thing I wanted to solve here. How do we get our content to the masses in a simple form? That could be my financial planner, my CPA, anybody, teachers, president, the union, or wherever I can get into my schools, all of that. So I'm going to pause for a second. Scott, any thoughts on how that, as we teach them all of this stuff, we give them all of the tools, the ingredients from technology, from LoanSense to Lender Launchpad. They just have to bring in their TCAs and we're going to market. And then you're going to do some special things with them too.
Yeah. So I have been, well, Dave was asking me about, I heard you're into ChatGPT and I rephrased that as more of an obsession, quite frankly. And I've gotten really, really deep into using AI to help us, quite frankly, being able to save a ton of time and create some really good, deep content strategies around this. And what this looks like, like Scott mentioned, is these are one-to-many content. So I'm going to create social media posts. We're going to create email chains that we're going to send out to our referral partners. And I mean, think about it. You're going to send something to all of your referral partners and all of the agents and referral partners that you want to work with potentially. And we're going to get those phone calls coming in. They're going to be calling you up and saying, Scott, I just got your email about this student loan thing. Hey, can you build me one of those? And then you're going to have an opportunity to start a conversation with them. And one of the cool new features of ChatGPT is I'm going to do all the work for you. I'm going to create all of the prompts. I'm going to create everything for you. And then I can share the link with you. And then you can go in there and customize it and make it your own.
Here, I'm going to show you the power of what Scott
right.
did. So let me just show this one thing, Dave, and we'll be done. So Scott created these prompts for me. I can go right in here to a place called Midjourney. And let's say I want to do a custom image for my next presentation, for my cash out refi, whatever it may be. I can give it a prompt and it can make the thumbnails for me that I can put on my Lender Launchpad and I can go to market with it. And so now Midjourney is going to come in here and create that image, which it's doing right now. So I gave it a prompt, which Scott Schang gave to us and taught us this in our Lender Launchpad community. I pop it into my Midjourney and it creates a custom piece. And I can go into, let's say it's my boomer piece right here. I can then open it up and then I could take that piece, save it as a thumbnail and use that on my Lender Launchpad. That I can use these as thumbnails for all my content there. So there's incorporating AI, not only for content, what Scott's going to teach us, but how we can create visuals, custom visuals that we can go to market with.
So guys, mind-blowing opportunity. Got a couple bonus tech AI hacks. So thank you for that, guys. Everyone watching this, I see some nice comments. Someone said, you have blown my mind. This is a game changer. Let us know, use those little reactions. You know, what did you guys think of the show today? Did you get value from it? Is this something that's going to help you with realtors? Obviously, this is something that's going to help you with any consumer that has student debt and any consumer that knows someone that has student debt that wants to buy a home, wants to refinance a home. Powerful stuff, guys. So really appreciate it. You've added to this speed to need sales training that we've done. We got another person. Brian said, this is definitely mind-blowing. Thank you. What was that AI picture thing? If you could put a link to that in chat, Scott, the AI visual creator. If you're watching this on YouTube, we will have a link down below in kind of show notes in the descriptions. And remember, this is part of a 30-day series. Like, speed to lead has always been one of the most valuable ways to have great conversion rates, to be successful, but it's not enough anymore. It's speed to need. That includes speed to lead, and that also includes getting to the consumer's needs and being a master at solving those. In student loans is a huge problem. It's getting ready to be an even bigger problem. And we're getting you guys prepared for that. Scott, any closing thoughts?
Yeah, I think those. So what I'm excited about to present this to your particular group, or our group, I should say, because I'm a user, is because of MortgageCoach. Because if you don't have a tool to show how the debt can be restructured or how you can figure out these puzzles, right? I think that's important. That's a huge element that you need. And that's why we're saying, all right, well, I'm going to build stuff to help you bring some technology in, LoanSense and the Lender Launchpad, so we can get to as many people as we possibly can. Here's the thing. This is the first inning. Heck, the game's not even started. We're just coming into the gates to the stadium. We're so far early into this because in July 1st, right, when the June 30th date kicks in, the 60 days, we're counting it down. And then the momentum and the volume of the issue is going to get louder and louder, where you guys have an opportunity to be first into market and keep those private guys away from your potential clients of refining them into bad debt.
All right, guys. So the ask and my closing thought is share this. You know, I want every loan officer that follows Trust Engine Facebook group, every loan officer that follows the Mortgage Coach YouTube channel. We want you guys to win. We want you to be mortgage coaches. I mean, to Scott's point, most of the biggest problems in the market today, like student loans, like the fact that 63% of all mortgages in America start with 2% or 3%, the fact that there's an affordability crisis and there's a lot of Gen Z millennials that want to buy homes, like you need to give advice. And there's no better way to do that than with a mortgage coach, total cost analysis. There's no better way to make sure that you're optimizing your database than sales boomerang alerts. So follow us, but share this. And if you did get value, give us a like. Scott, thank you very much, bro. You killed it. I am giving you a heart. And I'm also
nice.
going to give you a little share of hands. Thank you, brother.
Thank you.
Right.
Thank you.
Take care, everybody.
I'll put all that stuff in your I'll put all that stuff in your playbook. I'll put those links all in there, so I'll have it ready. I'll have it to you this afternoon.
Yeah, and make sure you're following Scott. Scott, does someone have to be a Lender Launchpad customer in order to be in your Facebook group?
Oh, I do. I try to keep it member only, but shoot, I mean, just ping me.
Well,
Just
no, I'm
ping
not putting you on the spot. I'm not putting you on the spot. But anyways, make sure you follow Scott. Make sure that you know, all the ways that he said take action. We'll give you a link to the website. If you've not done a demo of it and you don't know what it is, get a demo. I promise you, just showing up to one of Scott's webinars, you will be smarter, you will be better. He doesn't just sell Lender Launchpad. He is an educator. And I think that's pretty obvious by the free education that he gave us today. All right. Take care, everybody.
Thanks, Dave. Take care.
Boom.
Bye.
All right.